Hey, everybody, welcome to Mortgage Today for Wednesday, October 30th, 2024. And oh, what a day it was. It was a flat open for UMBS, up 2 basis points in the first hour of trading. S&P futures were up 3.25 points. Oh, wow, big money there. Prevailing sentiment heading into this week's payroll counts, ADP and non-farm payrolls, was that the hurricane would make for artificially low numbers. ADP is here to tell us that is not the case. So ADP employment came in at 233,000 on a 115 forecast. Wow, that's a huge beat. It was 143,000 previously. Wage inflation fell to 4.6% for job stayers and 6.2% for job changers. The expectation for Friday's job report is 125,000, so we might be looking at stronger than expected report. Job openings fell to 7.44 million in September from 7.86 million in August, according to JOLTS. Last year at this time, there were 9.31 million openings, so the labor market has cooled quite substantially. The quits rate fell to 1.9%, which is an indication that workers are nervous about taking a new job. We also got GDP numbers, so quarter 3 GDP came in at 2.8 on a 3.0 forecast. It was 3.0 previously. Core quarter 3 PCE price index came in at 2.2 on a 2.1 forecast. It was 2.8 previously. All things considered, bonds are holding up fairly well as a reaction. The 2.2 versus 2.1 in the core PCE data suggests a risk that tomorrow's monthly PCE will be slightly higher than expected, but today's quarter 3 number doesn't specify which months of quarter 3 account that was the but today's quarter 3 number doesn't specify which months of quarter 3 account for which percentage of inflation. If it's more focused on July and August, then tomorrow's report for September may not be higher than forecast. Bonds added a little bit of selling pressure after this data, but already seem to be having second thoughts. But at the end of the day, bonds lost ground today, but not as much as one would expect given the 233 versus 115 result on the ADP employment data. Granted, ADP is a notoriously imperfect predictor of the non-farm payroll that follows 2 days later, but that never stops markets from reacting on occasions such as this. So what stopped them today? Some combination of month-end trading, a favorable report on new Treasury auction amounts, bigger fish to fry, and perhaps the fact that payroll counts are being taken with a grain of salt due to weather-related disruptions in September. Ultimately, bonds did manage to lose a bit of ground, but not until well after the reaction to the morning data. At the end of the day, they closed the day down another 29 basis points, so that 5.5 coupon is trading at 99. There really isn't any trend lines anywhere around there, so no reason to really look at the chart. But in terms of things you can control is learning different things, so check out the video post from our sponsor at wellthatmakesense.com. This is part of the Yeah But series, so it's all about these buyer-broker agreements. Should I sign them? Shouldn't I sign them? Why would I have to? Never had to before, but maybe you did, and maybe it's a good idea, but maybe not. Let's debate both sides of the topic at wellthatmakesense.com.